Hi, my name's Steve Fitzsimon. I'm the Director of Business Growth at MRE. Some of you may know me, others this might be the first time. This is the first episode of MRE's Real News, and hopefully we'll be able to bring you with some updates about what's going on in the marketplace. And if you'd like to know any or have any questions that you'd like to ask us, then please reach out, let us know, and we'll try and cover off on them in the next episode. So let's get started. So the rental market's gone through some pretty significant changes just over the last few months. We've come out of the COVID beat up of rental prices and the difficult aspects of that period, and we've really now started to see accelerated growth that started in late last year in the final quarter of 2022. The start of this year has been nothing else other than electric. The prices have jumped dramatically, and it's pretty much across the portfolio of properties that we look after. So we started to see growth in the inner suburbs, being Melbourne CBD and the surrounding suburbs. A lot of that was driven around the normal injection of students that we have at this time of year. But the government has opened up borders, and that means that we've also had an influx of professionals with working visas coming into Melbourne, and that's basically they want to stay in the heart of Melbourne while they establish themselves, so that's boosted that demand even further. But now it's starting to spread out across the entire portfolio, and we're seeing a really significant jump. We're about 10 to 12% now above our pre-COVID rental levels for stock that's coming up to lease. So owners, when they're getting their rent reviews, are generally seeing smiles on their faces as they start to see some reward after that long break. Interest rates have really started to skyrocket, but a lot of our investors have either got small mortgages or mortgages on fixed term, still sitting there on fixed terms, or they don't have mortgages on their properties, they're cash buyers. So when you look across a portfolio, whilst we see that increases in interest rates, it means that owners are trying to recover that rental or that extra expense by increasing rental. It's not a one-size-fits-all approach that's necessary. The market still dictates rents, and so what we look at is, whilst we're seeing owners under more pressure, we've still got to meet the market when it comes to pricing. Luckily, over recent times, that pricing has come along, so it's been successful. Demand is really, really strong at the moment. So historically, January through March is our peak season, and we expect about 300% more inquiry on our properties, and we're seeing even more than that. The difference being this year, we've got 50% the number of properties on the market that we had last year. And our days on market, so the days that the property is advertised at the time that the property is leased, is at all-time lows. So it's come down significantly from the COVID period, and it's even lower than what it was pre-COVID when we were in a really busy rental market. So we're seeing something extraordinary here. This is not a normal circumstance. This is not something that I've seen before in all the time that I've been working in real estate and property management. This is something out of the box, and it's something to be expected over the next little while. We're seeing significant demand spreading across the portfolio from all different types of properties, and the rents that we're starting to see significant increases on what they were last time around. So what we're seeing in Melbourne was originally a boost to the results and demand for really inner city suburbs. Now, however, you can have properties in the inner Melbourne and even stretching to the normal suburbs of Melbourne, really outperforming their old limits. Recently, I've leased a couple of one-bedroom apartments that were furnished, and that's really popular at the moment. One for $600 a week in the Trilogy project, which is in Paran, and one for $625 a week for a property in Cremorne, which is a lesser-known part of Richmond. So two inner suburbs where rental prices for furnished have been very, very popular. As you get further away, it's your more traditional stock. So you're looking at two-bedroom apartments, one-bedroom apartments. If we go out to Fairfield, to Brunswick, to Thornbury, these areas, and also down into the southern suburbs and across to the west, all of those a little bit further out apartments are still outperforming their pre-COVID levels and really pushing on. The only things that are sort of falling away slightly at the moment are the more expensive properties. Some of those that are more than $1,000 a week are a little bit slower. There doesn't seem to be as big a pool for that type of stock. And also poorly maintained properties. Poorly maintained properties are now being overlooked by renters, and a lot of the standards have sort of changed. So we're seeing owners that have got properties that don't have wardrobes in them, for example, which used to be a common thing when sharers would move in, they'd buy a wardrobe and put it up, those type of things. That's not acceptable anymore. And now with the new legislation, meaning that many more apartments have got air conditioning put into them to comply with the heating requirement in lounge rooms, we're seeing that properties without air conditioning are also falling away in terms of their desirability. So there's a couple of things to keep in mind. So in the second quarter of this year, I don't see much of a slowdown. Normally we see after Easter each year, the rental prices and the demand starts to just settle. The growth slows and the volume of people at inspections also declines. But I think this year we're seeing something that's a little bit unique. It's not just students that have entered the market for the first 3 months of this year, as we historically have seen. We've also got pent-up demand for skilled workers that are coming into Melbourne now that their visas have been approved. I heard at one stage that the government had 1 million of these visas sitting there waiting for the borders to open. And if we see an influx that's even remotely close to that, they're all going to be searching for accommodation, and it's likely to be in the capitals where they're going to be hunting. If that's what's happens during this year, then I see significant rental growth continuing throughout the year. So that brings to an end our first edition of Real News from MRE. If there's anything that you'd like us to cover in the future, then please do let us know. We'd be more than happy to provide the content that you want to watch. We don't want to be like the rest. We want to be your agents here in Melbourne and providing you with what you need to know. So once again, my name's Fitzsimon. Thanks for watching.